So the S&P 9.5% higher. Japan's Nikkei surging 8%. All eyes now on the opening today here in Europe. The market reaction then to Donald Trump's decision to pause the hefty duties he'd only just imposed on dozens of countries. That even as he ratcheted up a trade war with the world's number 2 economy, China, with tariffs of up to 125%. Right as today, China imposes its 84% tariffs on the US. Well, let's start off then by hearing from Donald Trump.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, you know. They were getting a little bit yippy, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did. Did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible.
Donald Trump there. Well, let's get the reaction then from China. Talk to our correspondent, Yena Lee, who joins us from Beijing. Yena, where on earth are we with this then, as far as China is concerned? Any sign of China willing to negotiate at this stage?
Well, China has actually, from the start, mentioned negotiations or talking with the Americans from the start. But right now, they are demanding a bit of respect first. So at this stage, no breakthrough on the horizon. Tensions are extremely high, neither side backing down. In numbers, Beijing has escalated as much as the US, responding in kind to their tariffs, 34% and now 50% so far. The United States, though, insists that the playing field was vastly skewed in the first place because of that trade deficit they have. Without a breakthrough, though, we are heading towards a much nastier trade war than anything we've seen before. It's really difficult to see the end of the tunnel. Donald Trump's way of speaking certainly not considered to be very diplomatic in the eyes of the Chinese. Beijing has now announced travel advisories to its citizens visiting the US, as well as telling overseas students there to conduct safety risk assessments while deciding whether or not they should continue studying in the US. China is arguably the only country that can really hold its ground when it comes to dealing with the humiliating rhetoric coming from Washington, rather than the smaller economies who are having to sign up to strike deals with Donald Trump. Beijing is standing firm for now, so diplomatic tensions have escalated. But of course, it's neither in the US nor in China's interest to let the situation get out of hand any further. US tariffs on Chinese goods will ultimately hurt US consumers. Just think of the price of the iPhone that will inevitably rise. As for China, well, exports were the only bright spot in its economy as of late, so they'll both eventually have to find some common ground for their own good.
Yeah, no, thanks very much. Yena Lee joining us there live from Beijing. Well, our business editor, Charles Pellegrin, is also with me here on set. First off, Charles, let's check in on the stock markets. What's the situation?
Let's have a look at all the major Asian marketplaces this hour, and they're trading positively once again this Thursday after days of losses in the footsteps of what we saw on Wall Street. With its biggest burst of buying since 2008 after Trump announced that 90-day pause on tariffs on all nations except China. The Shanghai Composite and Hang Seng in Hong Kong are trading in positive territory, regardless of still being the target of a trade war from the U.S., reflecting the diminishing impact of Donald Trump even further increasing tariffs on China, and potentially a hope of seeing also a negotiated outcome between Beijing and Washington, considering Donald Trump's change of stance on other countries. Also worth seeing that the Nikkei in Tokyo closed the session up over 9% higher. Let's also check on oil prices. They are falling again this Thursday after making significant gains on Wednesday. Those trade tensions between the U.S. and China having an effect. Here, China is the world's largest importer of oil, and obviously tariffs would put pressure on the country's energy sector. And let's also check in on where the Chinese yuan sits compared to the dollar. Chinese authorities letting its currency weaken against the dollar in a way to offset the impact of tariffs for buyers of its imports. It is strengthening a bit, as you can see there, but it has reached levels not seen since 2007 earlier in the session. So yeah, the yuan above that 7.3 mark.
Sean, there's another aspect, isn't there, to China's strategy with regards to its trade war?
Yena mentioned the reliance on the export sector, and what we've seen in terms of policy from the Chinese government is a focus on domestic consumption, partly to offset that reliance on the export sector as a driver for growth, which represents about 0.2% of the GDP of the country. It's especially important because the country is struggling with high levels of youth unemployment, close to 17%, and somewhat of a deflationary spiral. The figures just came in for the consumer price index in March, which has gone down 0.1% over the year. So as we're struggling with inflation in the rest of the world, in China, they're struggling with more of the opposite, with deflation. So measures have been taken. Actually, at the start of the year, during its annual work report, Premier Li Qiang really wanted to drive home that idea of consumption. And for the first time, really, they made it a policy priority. The word was mentioned 27 times in the annual report. And in terms of measures, well, this March, they've launched a new program, a subsidy program that would provide 300 billion yuan in subsidies to Chinese consumers. It's around $41 billion. And this is to help them buy home appliances, to help them buy smartphones. It ends up being a 15 to 20% rebate for them. And this replaced an already existing program that was worth about 150 billion yuan, which was launched over the summer. The real question is, will it be enough? Some analysts are saying that the scale of a stimulus necessary today to really boost the Chinese domestic economy in order to offset that reliance in the export sector should not be in the billions of yuan or hundreds of billions of yuan. It should be in the trillions of yuan. So that's really one of the directions in which the Chinese economy wants to go in order to shield itself from those external risks.
So many issues to follow long term. Shorter term, European markets have just opened. What's the situation there then, Sean?
Let's have a look at how they've opened the session at the open in Europe. The major marketplaces are trading, as you might expect, a lot higher. The DAX in Frankfurt leading the gains, up over 8% higher. Interesting comments from EU Commission President Ursula von der Leyen this Thursday before markets opened, welcoming the pause in tariffs from Donald Trump, but also adding that, quote, clear, predictable conditions are essential for trade and supply chains to function.
Sean, thanks very much. We'll get a lot more from our correspondent, in fact, in Brussels in an hour's time here on France 24. Dave Keating will join us, so stay with us for that a little later on. Thanks.